Thank you so much, Chef, for joining us on a podcast at Dawdle. Extremely grateful that you took out time to share your insights with our audience. With the kind of profile that you have, we have a very interesting set of topics for you. But before we go there, Chef, I have read a lot of your LinkedIn posts, but would be great if you could kind of, run us through your journey so far to give a good context to our audience.
Yeah, thank you for having me, Rishikesh. So, my journey has gone from being a software developer and engineer, and then having founded my own ventures, and then like had some small exits and a meaningful exit, and then last 4 years I've just moved to doing angel investing, advising, and mentoring. So yeah, my foundation is in tech, and then I've gone through the journey basically that I try to support now with my capital, but also with expertise from all that journey.
Okay.
And I've done to date, so in 4 years, I've done 16 investments. I've got 2 exits already. So yeah, that's roughly about my journey, basically.
You have gone from coding, as you told, and, to kind of building companies to becoming a global angel investor now. If you kind of look back, what were those, pivotal moments that shaped this journey?
Right. I mean, if I go way back, when I was studying, I kind of understood, that uh, constraints in some sense we had here locally, for doing what I was trying to do, basically for finding companies that would need the services that I was trying to offer at the time, which was software development kind of services. And so I was trying to find a company to join, and that was not going anywhere. So if I can, a lesson I got from that kind of pivoted my journey further was that I could, stay in that constraint, or I could turn that into my biggest advantage, basically. And from that, what I learned is that, code has no boundaries. It will just the same help somebody in Tirana, Albania, where it was and where I am, but it could just as well help somebody in New York or London or wherever. And then that kind of gave me the push to actually look for customers in US and UK and these Western countries. And so that's how I got started into that journey. My early days started with Brand the Coder. I don't know if anybody remembers those days, but that's where I got started. I had my customers from US mostly, worked with them. And then at some point I realized that I could not, scale this anymore, just doing my, just selling my own time. And then I switched to finding a few ventures. And then throughout the journey, at some point I realized that, again, there is a bottleneck there. I cannot scale this anymore. I'll build 1 more 2 companies, but I can, leverage my expertise to maybe help others build as many companies as possible. So yeah, that's kind of like the points were pivotal, if I would say, in my journey.
This is inspirational, Chef, and
Yeah.
how did your experience as a founder who have built and exited companies influence the way that you evaluate and support startups today?
I guess it gave me, the like a very strong BS detector. I can look at the roadmap and tell, immediately if it's realistic or it's just fantasy. So because I've done it, I've shipped that code myself. I know what it takes. If I could say more importantly, it gave me like the empathy. I know how lonely that CEO seat is through all the ventures that I built and all the lessons that I learned. So when a founder calls me with some bad news, I don't panic because I've been there. I kind of know the difference between like a bad week and a really fatal mistake. So in a sense, I try to be basically the investor I wish that I had throughout my journey. So someone who understands the operational reality and not just the spreadsheets and then, um, all the actual numbers only.
That's such a serious stuff, Chef, because people say, good timing, good place and whatnot. But what I have seen in my entrepreneurial journey is that if you stick around, if you just stick around, things sometime, many a times start happening.
Yeah, absolutely. Totally agree with that.
I've seen, most of the stupidest of the people, just because they were perseverant, just because they didn't quit, they went
Yeah.
on to, become big, and now they hire from colleges like Harvard and Stanford.
Right.
And your example is one of that, Chef.
Yeah. I mean, in a sense, yeah, you have to keep going and going at it. Otherwise, you might quit just one day before you reach the success point, the pivotal point, or you are not actually going to get the lessons that you need to get to make it to success on the next round if you don't keep on pushing.
Chef, do you also see that, the founders whose background have been very humble, who have faced a lot of challenges during their childhood or adolescent, they perform better as compared to the other founders? What are your views on that?
Yeah, in a sense, it also like aligns with my thesis. I guess those who have gone through hardships, they learn some of their lessons, and so they build that grit that's needed to get you going and to keep pushing harder and harder.
Right. And you invest across US, UK, and Europe with a very clear thesis. What drives your conviction when selecting which sectors and founders to back?
So in Europe, I've not invested yet, but I'm looking. I'm trying to find
Just 1 second.
startups. Yeah. Okay. Okay.
Yeah, Chef.
Okay. All right. So, are you going to ask the question again, or should I just?
Let me ask the question again. Seth, you invest across US, UK, and you are also looking to invest in Europe as well with a very clear thesis. So what drives your conviction when selecting which sectors and founders to back?
Right. I mean, for the sectors I'm kind of involved in, which are the FinTech, AdTech, and HealthTech, Biotech, MedTech. uh, There on that last one, it's like there are sectors that are practically ripe for disruption. There are so many tech products there that are really outdated, and that there's a lot that can be done to disrupt them, and then make the user experience so much better, and kind of solve some pain points there. So those are like the verticals I'm focused on, the sectors, and for the founders, I try to focus on serial founders basically, and second time founders and more in a way. um, and yeah, so that's basically the core of my thesis. I'm trying to in all those solutions, in the two verticals, in fintech and adtech, I'm stage agnostic basically. I invest practically at all stages, whereas for the health, bio, and med tech, I try to enter at a more advanced stage. The earliest I try to enter is a bridge between seed and Series A, but mostly Series A and later. Idea here is that those ventures will basically take more time to reach the exit points. If other, like some of these, like in fintech and ad tech, would generally take 5 to 7 years, these ones in the health tech, med tech, biotech will take I don't know, 10, 12 years, because they have to go through like regulatory approvals and what have you. Yeah, for the stages, those are the stages, and basically, yeah. But also, if they have some kind of like real AI tied with it, that will actually also make it very interesting for me to jump on board.
And I see that you prefer a second time founders. So, what are the specific traits or behavioral signals that, you kind of see?
Right. So the whole point is, I mean, second time founders and more, they've got like I said earlier, they've got the scar tissue. They have learned their lessons, and basically they all comes down to velocity. If the first time founder has to learn how to set up, operations, how to incorporate a company, how to hire, and how to, how what contracts you need in place and everything. Second time founders and more, they actually know the path, they know the process. So instead of wasting time doing all those, they just go on and straight to actually doing the things that they need to do to win the market. And that's what's really important for me, to be able to work with them and help them push faster and faster. Now, I make some exception to this if you are not a serial founder, but you have had some previous experience in a startup, you had some roles, and that kind of gave you some of the lessons you're going to need on the journey. Because like I said, I mean, It all comes down to velocity. If you talk on Monday and I give you some feedback, and by Friday, the second time founders will already have built a prototype, or spoken, I don't know, to 10 more customers. So that's kind of the signal. It makes the difference. So if I could say, like, in a sentence, the first time founders have the uh, passion in some sense,
Yeah.
but the second time founders and more have the map. So if you just have some drive, some passion, you might as well end up off a cliff. Whereas second timers have the map, so they know where that cliff is and they're going to avoid it for sure.
And Chef, just thinking out aloud, like, we would love to have investors like you in India.
I'd love to, but there's certain factors that determine why I'm focused mostly in US and UK, and most of them have to do with the fact that I know the markets basically. So, and I know the legal environment, I know the taxation system, I know how business is done. And that comes from my prior experience being as a software engineer, and with customers later on with my ventures. So I'm looking in Europe, and I'm still, hesitant to jump, because when you make investments in a new country, you basically have to learn about all those, like the legal system. You have to learn about the taxation, and you have not only to learn, but you also have to be in the loop to keep on, getting the updates of the changes that happen in the country, because anything can change in a legal environment. And today you're safe as an investor. Tomorrow your investment could be, high risk. So that's why I try to stay in the things that I understand, and I kind of have some good grip on.
I got it.
But you definitely have some good investors there.
Yeah, there are quite a few good investors in India as well.
Yeah.
But we need more operators in India, because what we feel that
Yeah.
there are less number of operators who are investors. They are more like a
Yeah,
spreadsheet guys.
yeah, that'll definitely help. Hopefully, now that you're getting some exits from those companies that are growing, the flywheel effect has already started. So those companies that exit, the founders, generally what they do is they go back in the ecosystem and try to find other founders to invest in. And hopefully that will help with bringing in more of the investors that actually not only understand how to operate businesses, but also understand how business is being conducted in India.
You invest in deep tech and biotech, and you have backed very frontier innovations, right from stem cell therapies aiming to cure diabetes to autonomous delivery robots as well. So how do you evaluate high science, high cycle deep tech opportunities?
Yeah, I mean, I have done some investments like outside of my thesis, so I've made a few exceptions, and I generally try to avoid those, but unless like there is some strong conviction with the founders mostly, and yeah, but and also who like refers that deal to me. That's also one of the factors that determines that. But also, so I mean, it's a different beast, in deep tech, biotech, they're totally different beasts from what I'm used to. Like in software, the risk is execution basically. So, but in the deep tech, the risk is, does the physics, or I don't know, biology actually work? And that's very hard for me to actually go and drill it down, because I don't have that much expertise on that. So that's why, in particular, for health tech, biotech, and so on, I try to enter at later stages. And by doing that, even though I will pay like a bit of a premium for entering at a later stage, I kind of have an opportunity, a deal that might be a little bit more de-risked, because it has gone through those earlier stages of pre-seed and seed, and these other investors have kind of um, evaluate more on the actual viability of what they're trying to solve, and then it's just the commercial part, how well they will commercialize that. And also it will all come down to having a good network of people you can reach out to ask them about these particular cases, and if there are like investors that if they will refer me a deal and I know these investors, they know these sectors very well, that will also be a plus for me on how to kind of how to evaluate them a little bit better. But at the end of the day, it all comes down to people. And also what will be the impact for me, basically. So there will be investments that are like this diabetes one is both so it's actually outside my thesis on the stage only. It's not outside of my thesis on the vertical, but it's outside of my thesis on the stage because I invested early on. It's a pre-seed stage though. But the real decision factor was the question I asked myself is, and with every investment, I'm clear with myself that I will invest and there's a high chance that I lose everything that I invest in this venture. But the question that I kind of asked myself in this one is, what if it works? What will it do for the world? And this specific one that's trying to find the cure for diabetes, the answer was that it most probably will turn turn the luck upside down for those that have that bad luck of having diabetes, and it will kind of fix a lot of health issues. That's what one thing that I, if we're going to manage to bring to this world, I'm going to be so proud to say that yes, I did have a little bit of, I did have something to do with it, basically. Even though, however little that is, I did, have some effect to bring that to this world. Those are some of the cases as well that I make my decisions, because like as an angel investor, we invest with our own capital, basically, compared to like VC funds, they have to justify everything to their own LPs. But for us, yes, it is. I do follow like a thesis that one of my, I was lucky when I got into this journey. I landed on a group of investors, and one of the investors there became my mentor and was doing private equity investments for about 33 years at the time. And then, he kind of gave me the head start that would have taken me 15, 20 years to actually learn how to do this. So he helped me basically craft this strategy that I'm following now with my investment thesis. And the advice he gave me is, try to make most of your investments in the early stages, but also make some in the later stages. So even if all of your earlier bets will fail, you will get some capital coming back to you and some returns on top. And so far, that strategy has been working. And so that's why I'm kind of following this strategy. Basically, it's been working well so far, and yeah, I was lucky to have that advice early on. And yeah, basically that's how I go about it. To making those exceptions to enter those other like deep tech and biotech a little bit outside of my investment thesis. That's how I go about it, basically.
Chef, what does your name mean?
That's an interesting question. So, I mean, in Albanian, it's the full name is Shefqet. So, if you split it up in words, it means quiet chief, and yeah, the chef means chief in Albanian in a way. And it was funny that how I got this short name, because generally in Albania the name Shefqet is called for short Chetty or something like that. But with the US clients, they were having a hard time actually to pronounce my full name, Shefqet, Shefqet, Chef. And so, but one of the clients, when they said chef, and I said, okay, that hit me, and I said, okay, that's easy for you to say. Now everybody can say that, so I'm gonna use that from now on as a short, as a name for my customers, so I don't have to explain it to them anymore how it is. And that's been going on so far. But it's a little bit hard, not hard, but it's weird sometimes in Albania, because the name chef means chief and also boss at the same time. So when they hear people calling me chef, they turn their head and think that I'm their boss or something at this, at some point. But some, of course, now a good number of them now know the story behind this, how I got that short name. But yeah, that's about my name.
Got it. Because I was kind of thinking that, are you from Israel or some part of that? I'm kind of confused with that.
No, I'm from Albania, yeah.
So, Chef, when you look at AI, robotics, biotech, or fintech, what helps you differentiate between genuinely disruptive technology and noise? Because there's a lot of noise around as well.
Absolutely. There's lots of noise. It used to be a little bit back on the crypto Web 2, like Web 3 stuff, and then now it's AI this and AI that. There's lots of noise out there, and like with crypto, I kind of try to stay away from it. For I kind of course, the mentor helped a little bit from this, but also myself, I kind of understood that most of the crypto Web 3 stuff solutions are like they're a solution in search for a problem. Most of them, they're looking like science projects from schools. So I'm not gonna back science projects. So I'm gonna look for real businesses basically. And there are also high risks in many levels. But one of those is the legal environment. Anything can change at any day, and one day you have the business, the other you don't have the business. Now that's it. That's about the crypto kind of noise. But also on the other end, now everybody's calling their solutions AI based and AI this and AI that. And that's also a lot overhyped in most of the cases because they're just a wrapper. They're basically using an AI vendor, I don't know, OpenAI or Gemini or what have you out there. But I try to basically, look if they have something else other than just a connection to like a generic AI vendor that's offering their services, and that extra could be, do they have some proprietary data that they can, like a proprietary data loop that they can later on maybe build something around that, or already have built something around that. So the more data they have, the better their AI angle will get, basically. So if they have that loop in place, if they have, you know, building your own model is going to cost a lot, but you can do something else. You can take one of the models and you can actually fine tune it and make it yours. And so you don't have to actually be 100% based on all these generic AI vendors. And the whole question, is if you base everything on the AI vendors and one day they just push a feature out, something that you're currently doing, will your company survive? If it cannot survive, then you don't have a business. I mean, you're basically you're building on borrowed land. They will claim that land back, so you don't want to build on borrowed land, basically. And on top of that, I don't know, in two of the verticals, I also look at the regulatory mode, basically. If you're in FinTech or biotech or what have you, regulation is a massive advantage. It takes time to get licenses. It takes time to build like a compliant infrastructure and so on, or get FDA approvals. So it takes all the time. If you have those, you have some certain level of moat, basically protection around you. So that kind of deals a little bit with having all the pretentious noise around all the buildings.
And what are the frameworks? Like every angel investor has got their own frameworks and principles. So what are those frameworks or principles that has helped you succeed as an angel investor because you've got two exits in a space where risk is extremely high?
I mean, one of those is I stick to my thesis, basically, that I mentioned earlier, that was kind of built together with my mentor. But it's at the end of the day, I make peace with the power law. I accept that I don't know, half of the companies I invest in will go to zero.
Yes.
You cannot do anything about it. But I'm looking for that one company that will basically return me, I don't know, 50x, 100x. So yeah, in a sense, this is very high risk investment asset class, but the returns are asymmetrical, basically. Like I said, half of the companies can go, but then just one could give me back, the investments and some returns and so on and so forth. So yeah, sticking to that and also accepting that I will lose some of the investments, but I'll get some more from the very few. Like I'll get back some capital from the very few that will make it. And when it comes down to making the decision to invest or not, I kind of ask a question myself: would I work for this person. Yeah. If I can't bear being around them as an employee,
Yes.
chances are that they will have a hard time attracting talent to work with them. And if you cannot attract and retain talent, you're not going to make it.
Nothing can happen.
So, yeah. So that's also one of the questions that I often ask myself before I decide to jump in or not. So, but yeah, sticking to the thesis is very, it's hard in the beginning, but then, you get used to it as time goes by, and you get used to it, because it's very hard saying no to people. And that's a very easy trap that um, that gets like non-experienced investors caught into that, and because you cannot say no to people. But like I said, my mentor taught me that, and it's something that I had to actually push myself in the beginning to not feel ashamed about it, to not feel bad about it, because some people should not some people, but the general advice is, the historic facts are that you generally get things right when you know what they are, like when you know, like, the sectors you're gonna get involved in, and all that. So when you get involved in stuff that you don't really know, chances are you're gonna get them wrong. So, and there are other investors that know about those other ventures that you're going to say no. So you shouldn't have to feel bad about them saying no to people. That, and also one advice, if I may give to like those early starters, is do not invest in the first few months. Do not invest. Just join pitches, listen to them, and listen to other investors, what questions they ask. If there are some discussions with investors only after a pitch, that will also help you learn about the process, learn about the mindset and everything. So just go out there, listen to pitches, and then when you're going to be ready, you will know, because you will have such a much more clear picture than just going directly. First a few pitches you listen to, and you decide to jump in because you get convinced now. And another thing that I forgot to mention earlier is that I don't let myself fall for like the uh, the excitement of the moment. If I like something too much, I gather all the facts about it and I leave it for a while. And yeah, when I go back at it, and if I'm still excited at the same level or more, that kind of gives me the signal that yeah, it is. This is something that I want to go in, basically.
These make a lot of sense, I think. Yes. I think a lot of the, people who must be listening to this podcast who want to become an angel investor will take a lot of clues from what you said. And Chef, these are very, very, relevant points without any difficult words and all that. But you have explained it in so well. Don't fall.
Yeah, yeah. I try to help investors. I've tried to help a few that have come to me, asking for advice. But yeah, I share it all. Try to share most of it on LinkedIn, mostly on the founder side, but I do share for investors sometimes. And I have my DMs always open. Anybody who wants to start on this journey, don't, reach out. Somebody helped me when I got started. I'm trying to be that someone, but for another one here in this.
You also actively mentor, the founders globally. What, in your experience, makes mentorship truly impactful, especially for early stage teams?
I mean, yeah, I see lots of people mentoring on lots of things, but this is cliche, I guess, and everybody says it, but it is what it is. Generic advice is useless, basically. Telling like a founder work harder, it helps no one. It's they know they have to work harder. So, but if you give them some technical advice, and like, I don't know, here is an introduction to a specific customer, you need, or here is a qualification framework you should be using for your sales, basically. All these kinds of like uh, actual actionable advice that can help founders at pivotal moments is what makes the difference, and not this generic advice that keeps on floating around. And some founders even pay actually because they fall in the trap, and that's very bad. I feel so bad for them when they fall in the traps of these like people that keep on feeding them generic advice. But uh, uh, I keep requests, for paid mentorship, and I keep on getting suggested you should start, offering paid mentorships and stuff like advisor and stuff. So far, I haven't jumped on that boat because I do have the bandwidth to try and help them free of charge in a way I can. I don't know if ever I will jump on that. Give them actual, practical, and actionable advice that comes from years of actually doing it yourself, and actually being in the companies that have had to go through those steps. So, like, just yesterday, I had a call with one of the founders that I have partnered with. I try to mentor them whenever I can. And on one of the calls, she was trying, she asked me, I have this difficulty pushing one of the companies to close faster. And the suggestion was they have customers, like they have suppliers basically that will be brought on this platform by them. So what you could actually do is go directly to those suppliers and tell them if they convince their client to come on the platform, they will get their own subscription for free for a year or so. But then, and they also be able to get more business through the platform by doing that. And so, if you get like few of their suppliers to come on their platform, then they will basically tell their own buyers to, you should jump on this platform because it makes things so easy for us, and we want to have this like an easy path for logistics and stuff. There are ways that you only learn and know from what you have gone through before. And like also, I mean, on the tech side as well, I've helped a lot, but on the sales side as well, I had to learn sales the hard way myself at some point, because I'm like, my foundation is in tech, and we as tech, we can't really sell because we sell with logic, and sales is not done with logic, is done with feelings, is done with the end results, what the customer is going to get. And we go and try and explain things, I don't know, this website is going to be for this device, and the button is going to be this big, and it's going to be whereas the customer doesn't really care. They only care if how much more business is going to bring to them, or I don't know. So I had to learn that hard way. And then I had to, and I have this kind of approach towards things that I do. Once I get doing something, I try to consume as much materials, like as many materials as I can, and learn as much as I can, and go as deep as I can on them to actually truly understand them, and not just, be a tourist on what I'm doing. I kind of accepted early on that I'm not going to be great at everything, but I'm going to be good at what I'm doing. So all this stuff that I managed to acquire as expertise throughout the years, I bring that basically to them, and it's the actual truth. So like, the real impact in mentorship will happen like at inflection points. So like when they're fundraising, or making like a first senior hire, or that's when, like, I don't know, a 20-minute phone call will save them like 2 years of pain. So if you can come in and bring that expertise, that guidance, that's how you're gonna make like the actual impactful mentor.
And when did you click that photo which is at the back of you?
So that's from my master's, when I got graduated in my master's degree.
And when did you do your master's, Shef?
So I when or where?
When?
What?
When and where?
When?
Both.
Yeah. So so it's funny with my master. So I was working as software engineer, doing well, doing great. And then at some point I understood that I wanted to, I could not scale that. I was selling my time. And then I was trying to find people that I could, partner with to build my next company, which I was thinking of creating actually a software development company to basically be able to scale that way. And I was trying, looking around, and one thought that came to mind is, from my early years at university, I remember that there were great students, and the university was a good quality university. So I said, okay, I'm gonna do my masters, and by doing the masters, I'm gonna do two things. One is I'm gonna get I'm gonna get a degree. You never know what it might be useful for in the future, but also I'm gonna try and find somebody I can partner with from my classmates. And I started that, masters in computer science and with a focus in software engineering, basically. But during the first year, I kind of understood that the quality of the students in that in that cohort was not the ones that would help me, make it. So I kind of did the first year, and then I left it. I went on and started my first company, and then on with other companies. So I think it was. I'm gonna lie you if I tell you the exact year, but I think it was about 5 years ago or so. There were some more classes that I still had to finish to be able to get the degree. So I went back and I said, I don't want to leave this investment, incomplete. I want to get the damn degree out of it. So I went back and I did all I had, and I got the degree in the end. It was a bit harder because my first child was also came in life, and it was a bit of a harder time to manage everything between the businesses and the degree and the family life. But I did manage to get it in the end. And yeah, if you go and look in my LinkedIn profile under the education, you're gonna see like a huge timeline for
Yes.
for actually getting the master's degree. But it's because I stopped it at some point because I didn't see purpose in I didn't really need a degree, and like at the point where I decided to stop it because I was already had lots of clients, and I was already bringing in money, so I didn't really need a degree to continue doing what I was doing. I just started it because of the reasons that I said, and but in the end I just said, yeah, I'm gonna go back and get it. And so I did it here locally in Albania, but they are in a cooperation with a British university. It's a Greenwich University. So yeah, so I got the degree from that university, basically.
You got it.
Yeah.
And from all your, entrepreneurial exits and early investments, if I have to ask you that, what are those things, on which you will never invest?
I mean, it's things that are probably at the wrong time. That they're timing the market wrong.
Yeah.
So that would be that. And if there are like wrong, misaligned co-founder mentality, that there is not actual team like partnership mindset there. There's just, everybody's going towards their own directions, pulling each other, and instead of helping them push them forward. So yeah, I mean that's the real important part is here is that looking at each deal, you can have like the best code and the best team in the world, but if the market isn't ready, or like if the market is too small, you will fail. I used to like obsess over the product before when I was like developing myself, like building. But now like I look at the market first, and is the wave rising basically, or like is the tide going up? So it doesn't matter, how hard you swim on those situations. You're not gonna make it. So yeah, that's like kind of things that I try to avoid.
Got it. And what do you think about the Indian startup ecosystem? Any idea?
I don't know much. I'll be honest, I've got lots of actually like founders from India trying to reach out to me and trying to pitch me their ideas. But like from like outside look in, I would say that the talent in India is undeniable. So maybe the gap is like what you were talking earlier. Maybe the capital from prior operators is what's missing, and maybe also like patient capital.
Yes.
That can like stay within investment for example, like in deep tech, you're going to need, I don't know, 7, 10 years. So you have to be like patient there, and you need those investors who are like comfortable with those long cycles of research and development. So and you you know, the people who are not asking for revenue metrics in, I don't know, in month 6, you know, it's the product is still building. So yeah, and also maybe a little bit more of like a cooperation with universities, probably. So you can get commercialization of this like deep tech kind of ventures to come out of universities, because they have like the advantage of
Infrastructure.
having,
Yeah.
yeah, having the infrastructure, but also concentrated higher number of PhDs and research students around them, and they can also build them for their own purpose of their own research. And then if it comes to a point where it matters to commercialize that, then work with the private sector to actually push those out as a spin-off and commercialize them. So instead of just starting from the private sector, doing all the steps.
And that is one difference that I've seen in the Indian ecosystem and the US ecosystem, is that in the US you will find a lot of PhDs becoming entrepreneurs, a lot of doctorates becoming entrepreneurs, but in India you will rarely find any PhD becoming an entrepreneur.
Yeah, that because probably there is no incentivization there.
Yes.
Maybe they're more incentivized to stick to a more safe salary or things like that. So the system is not incentivizing them. So there should be looked into how they can be incentivized to. There are two paths. They can actually become founders themselves, so they can work in the university with the with a vision that what they're going to produce out of there can find a commercialization path.
Very insightful discussion, Chef. I think we touched upon a lot of points, and we right away started from your founding experience to your investment experience, and what are the pitfalls that angel investors and founders and investors should avoid. And also, the way you explained the things in a very layman term for everybody to understand. I hope this session is going to be very helpful for everybody who is aspiring to be an angel investor, and all the founders out there, who are kind of building just, I think one of the things which Chef told in between was, don't find a market for a solution. First of all, make a solution for that market, right? So
Yeah.
that kind of will stuck around with me, because that is supremely important, because otherwise you will just keep on wasting your time. And it's better that you work in a company and earn some salary than to waste your time on doing something.
Yeah. You need to know the timing of the market for sure. That's the win above everything.
Thanks so much, Chef, for joining us on this insightful discussion at Dawdle.live. I will be in touch with you, and extremely grateful that you took out time to share your insights with our global audience. Thanks.
Absolutely. Thank you for having me. I love trying to help like people we're trying to help founders or investors or anybody in the ecosystem. It's something I love doing it, because I'm practically retired at this point. So this is all I do now. So, and I love trying to help ease the founder's path in any way I can, or the investor's path, as well as hustlers like yourself. I want to help in any way. Yeah, thank you for having me. Absolutely.
Thank you so much, Chef. Thanks.
Thank you.